Hey, what's up, everybody? This is Chef. Hopefully, everybody had a great 4th of July weekend. And I do apologize I couldn't get a video up early for you guys because of the holidays, but I'm sure everybody had a great time, right? I sure as heck did. So happy Independence Day yesterday. And hopefully, like I said, y'all had an amazing weekend, right? So anyways, let's start breaking down some of these tickers and the futures, and let's see what we're up against in the next couple of days. It is a short week, guys. Today's Tuesday. We have Wednesday, Thursday, and Friday, and we do have some data that's coming out. I think that there is some PMI and what was it? Some FOMC on Wednesday. So tomorrow, 9:45 a.m. There's PMI, and then job openings and FOMC. And then Fed speak on Thursday, not very important Feds, but they do. And then unemployment on Friday. All right, so we have a lot of stuff going on with the markets, and I want to be able to break down some of this stuff for you. Some futures just to kind of see what we're looking at, right? So let me just delete this. A lot of this stuff is from previous sessions, so we're gonna check out some charts. All right, first things first, /yes. Everybody's wondering where we're going, what are we doing, right? We do have GDP next month. I believe I did say it was on the 13th. I think I might have been mistaken there. So please check it out. The date might be on the 28th, but sometime next this month, right? This month we do have GDP for second quarter coming up. So why is that important? It's important because if we go negative on the GDP number, that just kind of says that we're in recession, basically the economy. A lot of the movement already since the beginning of the year, we've already been trending down. So based on percentage wise, we are currently in that bear market territory, but the bear market has been since the beginning of the year, guys. All right, so let's get that straight. Bear market has been since the beginning of the year. Okay, let's make that very, very clear, because there hasn't been a new highs. There hasn't been all-time highs on anywhere. I mean, other than oil going like crazy. But everything in general is just basically all down. Okay, so no matter what the media says, no matter what's going on out there saying that we're going to keep on dropping lower, or we're barely in a bear market, or bear market this, bear market that, we've been in since the beginning of the year. Okay, now it sucks to say that, but that's just the reality of it, especially if you're kind of getting into the groove of things. Well, you're kind of late to the party, or you're a brand new trader and you just want to know what's going on. But yes, we are, since the beginning of the year, we are in bear market. Since bear market, all that means is that everything is trending down. There's a lot of volatility. Volatility meaning that the moves are a little more aggressive to the downside and the upside. So there's a lot of big moves going intraday, up and down, and you can make money on puts and calls in one single day. That's how crazy it is. Okay, that's bear market for you. That's not a proper trend for you. Okay, there's a difference. So anyways, despite what's going on in between all that, what's going on here with ES, based on this weekly time frame, we're kind of just sitting here at this like random support right here at this 3680 level, 3690, whole number rounded off at that 37. Okay, that resistance that we had was the 38, and today we broke it today, 38.33, which is kind of cool. All right, so we're kind of in the middle of nowhere. This is your public participation phase, and there's not a lot of demand. The demand is basically here from when I talked about it last time, and then here is your supply, and then you can see that we did reject. So we're kind of in the middle of nowhere right now, right? So I think there's going to be a lot of cool off. We do have earnings in the next like 2 weeks, or next week. Sorry, we have banks kicking it off with some airlines, which is DAL. So I think there's just going to be some cool off in between, guys. So whatever happens in the next few days, don't expect a lot of crazy movements. Expect like some range trading and like a retest of the top, a retest of a bottom. Don't come on here and try to get biased on something, okay? Because technically we don't have a direction just yet. Like I said earlier, you have opportunity to make money with puts and calls in one single day. Okay, that's how volatile this market is, and that's how it presents itself. So we as traders got to be able to adjust to these markets. All right. So this one, /ES had this like little bear flag going. These two candles weren't here because market open, of course. But it did break down this flag here, and it broke down to the bottom, which gave us a nice little support, as you can see. And then we just came back inside. So we're back inside this channel. We're kind of like in the middle of nowhere, like I said. So when you have this, you're kind of wondering what the heck is going to happen next, right? The best thing to do when you see stuff like this, all you got to do is come on here and use the pre-market levels as your entries and exits, okay? Use those as guidance and use the previous day high, previous day low as targets. Literally keep it as simple as possible. Don't come on here and thinking that, oh, we're pushing up, we're going to keep going up, or we're pushing down, we're going to keep pushing down. Okay, don't get in that mindset, because that's what's going to ruin you and your trades moving forward. So here, look at all the bases, like I said. So this is your pre-market stuff. Here's a base right here, a strong base actually. So we're inside, we're right here at supply. There's a high probability that overnight we probably come back down like this. Once we do this, you got to determine whether if we break the pre-market low. The pre-market low is going to be your acting support. That acting support is where you grab calls, and that's where you stop out, okay? Plain and simple. And you're going to do the same thing when you're on the break above. Okay, this one you're heading into a little bit more resistance. So if we break that 38.50 in the next couple of days, expect a nice run all the way to this top up here, okay? So I'm on the hour chart, so just giving you guys a little heads up. So I will look for this piece first. If we continue to go super bullish tomorrow, there's a high probability that we probably don't, and we may do like a little gap up and then a drop back down. Okay, we don't have a real reason to push up aggressively, or we don't have a real reason to continue pushing up. This market has been beaten down so much, so remember that. All right. So here's your levels for tomorrow. As of right now, is this 38.35, and then the next one is 38.50. Once you start breaking above these levels, guys, start trailing every 10 points. Forward/ES move like 10 points, and the market moves in general every 10 points. Below 38, that 35, you want to drop it all the way back down to this 38.12. So I'm using this previous base as a support and resistance as my entry and exit, and stop loss right above or right below. Keep it simple, guys, right? Nothing too technical about this. You're just using the previous base, all right? So that's forward/ES. NQ, same thing. You want to go look at that previous base. So your base starts here. Well, this is a little tighter, so. All right, so this one is going to be 11688. Let me use this right here, 11709. So this is going to be my area where I'm going to look for a potential drop into. If that doesn't hold, then it'll probably just come right back down, right? Hopefully that made sense. So that's going to be considered my zone. And then here, so I'm grabbing the bottom of this base right here with the candle bodies, and I'm using that as the next structure. So you guys are probably going to wonder, well, what if we drop right here and we reject? Okay, then that's cool. So what do you expect after a breakout of supply? You expect that retest. At this point, you can come and look for a call position here with your stop loss legit right there, because there's no reason for you to hold if this breaks. If this breaks, it's going to come down here. And at that point, I don't want you saying, well, I need to hold just a little bit longer. I'm only down 5%. It's not enough for me to get out, right? No, because by the time it gets down there and you expect the bounce, there's a probability that it may not bounce. And at that point, you're going to be down like 60% and then 40% or whatever it is percentage you're down. And then you're going to psych yourself by saying, oh, well, this is the last support, so I'm going to give it a little more. And then if that breaks, you're going to say, well, I'm already down, so who cares, right? Don't build those habits, guys. When you guys are looking for a call play or a put play, figure out what kind of criteria it is, and then determine where your entry is going to be. In this case, you want to buy a call here for a retest play. If it fails, you'll know because it'll break below, and that's your stop loss, right? Now, if it goes back inside right away, don't think twice about getting back in. Use that same level because that's going to be your retest level, all right? So that's all I'm looking for, NQ. I'm looking for a nice pullback. If this thing does continue overnight, then all you're simply going to do is use your pre-market levels. And once we break above, go long. Once we break below, go short. Very easy, right? As easy as it sounds, it's just as hard to do it live, guys. So don't feel intimidated if it doesn't make sense. Same thing for RTY, guys. And all I'm using is this base. Like I said, here's your base. Here's your base. So see how that kind of aligns here. We ended up stalling here. So if this breaks above, it's probably going to rally. But probability that we probably stay inside here, find or form a support, and then come and break later, right? So all just depends. It's all about getting ready and preparing yourself for the next day. And yes, I'm using the hour chart just because it makes a little more sense so I can show you guys on the futures, right? So now what happened with oil? Some of you guys are probably wondering what's going on, right? Here's the thing, guys. Oil, let me show you. All right, so I'm gonna go, I'm gonna change my time frame. Where's the max? I think I got it on max already. Oh, sorry, weekly, max available. Here you go. All right, so I'm gonna bring out this max chart. I'm gonna show you exactly what I showed you guys in the past and what I said in the past. We are at a supply, okay? There's nothing more to it, and I told you guys to be careful and to watch how it reacts at these levels. That was the one thing that I did mention, all right? So can we hit this 147? Of course we can, all right? Not taking anything away from that. The difference here is how we got there, what is going on, and why is this area of importance becoming a supply? That's what you got to look out for, no matter what's going on in the world. I don't care if Warren Buffett is buying oil. I don't care if somebody else is investing in oil because they think this thing is going to go to 500. Okay, I don't care if Warren Buffett thinks it's going to go to 600. What matters is what's in front of us and how it's going to react. Look at the characteristics that happened every single time we came up here. Well, look at this. Look how big that drop is. Okay, this wasn't even COVID. And then look at the way this reacted when we hit that high. Literally, it just collapsed. It looks like a freaking Superman roller coaster from Six Flags, right? If you know, you know. And then look at this. Look at the instant rejection when we hit above supply. And all it did was it broke above, it got hyped up, and then that snapped back into reality, come back inside where you belong, and you're back in that supply. The same thing is going on now. The difference is that we had that doji, and this doji I talked about in the past when I made the previous videos. This doji just gave us the direction for this. So this creates a drop base, right? Here's your base, and then here's your drop. So this pattern, it's a doji followed by a drop, base, drop. That is a pattern, that is a breakup structure in oil in general. The structure here is now broken with a proper pattern. What happens after this is the retest happened here, already happened. So now you're going to expect a nice staircase pattern. So you're going to expect something like this until you find a actual demand, right? So let's talk about the next demand, right? So now that you have this picture painted, hopefully you can understand exactly what that is and how it plays out. How it plays out and how it's going to play out are two different things, okay? This can play out and literally get bought up tomorrow, and then this thing can be at 130. Who knows? All right. All I'm doing is I'm showing you the chart and not showing you any hype behind that. The characteristics here are what's important, knowing where you're at on the chart and knowing how to break down these structures and see them properly so you know as a trader what to expect, where to set your alerts, and how to move forward from here. Because now you don't have to sit here and say, oh, well, this is a great dip buy opportunity. It's going to go to 500 because Warren Buffett bought it. Who cares about him, okay? He does not move the market. It's buyers and sellers from here all the way to Egypt, whoever has access to these markets that are going to be buying and selling. Those are the people that move the markets, all right? Warren Buffett is just one man. All right, so here's your drop, base drop. And then what's going to happen the next demand? All right, let's go look at the next demand. We want to go look at a structure. Technically, we have no structure until we get down here. This is your base down here. And let me show you why. Okay, we went sideways. We went sideways some more. We retested here. We retested there with 2 candles. Once we came here, this volume spike literally confirmed that buyers stepped in, and that's how far they brought it up. So yes, as crazy as that sounds, by the end of the year, this has potential to drop back down into that 60 level back to normal. If oil fundamentals and economic situations get a little bit better, right? You all know that Biden did send out a message to anybody who owns those oil companies to basically drop the prices, the gas prices, and it caused a nice little hype sell-off. Despite the hype sell-off, you want to wait for the direction of this pattern, the drop base drop. You want to go look for something like this and create a staircase pattern. Now, if this fails, then for sure that retest is going to reclaim, and then that's when you're going to know, like, okay, that pattern, it's no longer building that staircase pattern, so we're going to build the staircase pattern back up to the top. Okay, so no matter what, I don't care who bought it. I don't care about Warren Buffett. I don't care what Biden said. This is a drop-based drop. That's confirming my pattern that we see clearly here. So anything else is getting backed up. I don't care if it's close to your EMA or your SMA or your VWAP or whatever it is, whatever the reason may be. A drop-based drop pattern continues with a staircase pattern, okay? That's what it is. If that doesn't play out, guys, then we're screwed on gas, okay? So now we're gonna, anything below 100, you want to just trail it every like $2 to $3 for oil. Now I'm not looking to play oil, but it's definitely a good one to short if you ask me. I think we're a little late, but another thing that I want you guys to keep track of is gold. If gold does break down right here to 1750, I want you guys to short the crap out of it all the way down here to this around 17. I'm gonna grab these wicks right here, 1677 and 1690. That's gonna be a nice short because nobody is interested in buying gold anymore. Gold basically topped out right here, and it's been trying to hold. It's been trying to hold some type of value, but it has not, guys. It is not a safe asset either. It's not acting as a safe asset, and once this drops, it's probably gonna collapse a little bit more. Okay, so short it right here at the 1750, which could probably happen this week, all the way down to 1675 or even 17. All right, so look for a new trend change on gold once this thing breaks down. So what tickers can you trade? You can look at GLD and I believe JNUG. Yeah, JNUG you can short too, but I wouldn't short this one. I would prefer to just go at GLD. I'm sure there's other tickers, so I'll leave the homework up to you guys. You guys can go ahead and search those gold tickers. All right. But anyways, let's go look at a few tickers. Let's go look at BA. I'm going to give you quick levels for you guys to look at basically on the 4 hour that you guys should have alerts that may cause trend changes. All right. Trend changes are major because you're breaking a supply or demand. The 141 here, do not miss that. Okay. If we break this one, the 131 here, also don't miss that. So this is either going to run up like crazy or run down like crazy, whichever one comes first, whatever it is. As you can see, I have my alerts. All right, so that's BA. Next one is going to be Disney. Disney tomorrow, I think it's going to be great potential over 97. So if this thing can just stay above like this 97, 96, what is this? 96.40, 96.40 and 97. I think it probably has room to keep on going. As you can see, nice drop, nice sideways movements. And once we break above that sideways movement, we're going to come back up into that basically $100 level. Okay. So make sure you keep alerts on Disney. Next one is going to be PayPal. I actually wanted to swing this today. I wanted to enter today around like below 72. Unfortunately, it did not happen, and it wasn't much of a pullback. It actually was a stronger run-up that didn't really give me a good confident entry. This thing just ran from here, and then this is where I mentioned it. And unfortunately, I did not see this little flag here, and then it just kept on running. But the move was too big for me to even get back in. So PayPal, same thing, almost the same setup as Disney. If we can break 75, anything above 75, guys, is going to trend change and start moving back up. Anything below 70 just in general 70, it's probably gonna drop even further. As much as I don't want it to drop any further, it potentially can hit that 65 again. So 75, mark your alerts there. I'll do it now. Here you go, 74.97. So I want to make sure that we break above. So this is your supply, okay? So that's PayPal. Another one is going to be Meta. Meta is actually a real good one. So same thing, nice drop, sideways action here, right? Sideways action. Okay, so just giving you a general idea. And then we trade sideways here all along. This one had a nice little falling channel and it just popped up today. So if we can get above this supply here, that 170 all the way to that 170, 150, I think Meta can trend change like crazy and get some attention. Okay. Otherwise, let it do its thing, trade the range, and then use your pre-market levels to play calls or puts. All right. So again, I'm giving you guys some great tickers that have good bases that have a lot of great potential. Next one for tomorrow, keep this one on for tomorrow. It's going to be Costco. If this thing breaks 490, you just want to think calls. All right. 490 all the way to this 498. It can be a nice run up for Costco. It's building some pressure here right below this resistance, and the supply is basically here. Let me show you. Here's your supply. There's your supply. We're right below it. So if we can break above this 490, we'll ride it to that 498 and even 500. So we close at 500. I would honestly just keep on swinging Costco. Okay, it's a great one. This has a lot of pressure here, so it can have an aggressive pop. Another one similar to this is UPS. UPS kind of beat down too. Great company, slower mover, spreads are a little wide, so it's a little riskier, and not a lot of crazy movements. But definitely, if there's a tight pattern here and we're tightening up right below that resistance of 184.50, we can definitely pop all the way to 186. And then once we break this 186, we're going to go straight all the way into that 190, 180, 190, 180, and 189. So 190. So every like dollar, you want to be able to trail this UPS position. So this one and Costco are great tickers to be watching out for tomorrow if we have a nice bullish market. But even if we don't have a bullish market and market is just range trading, you guys know that this market has been very well balanced and it's been providing a lot of great opportunity. And there's a lot of stocks that have been holding even though the market is dropping like crazy. So watch out for some of these odd tickers that end up trending, okay? Also keep in mind tickers like BAC, C, DAL. A lot of these are small tickers, guys, so go check them out. They have great bases, and they had nice green days today, and the risk to reward is amazing. So just go check them out. I highly recommend looking at these because what they're doing is they're retesting from where they broke down from, and they could have potential green days, right? So check out financials. These have earnings coming up soon, and there's going to be a lot of IV changes. So the IV is not in yet, so we're at 44% right now. Once we start getting into the earnings, then the IV is going to pump. So if you want to get in an early trade, whether it's a put or a call position, start catching that IV now. The more you enter now and start scaling into a position, the more that the IV can help you. Even if the trade goes against you, the IV will help your contracts, okay? If you don't know, please ask me about that, and I'll make another video on that later. But anyways, hopefully you guys had a great week, and you guys stay ready for a potential breakout, a potential breakdown, whatever comes first, guys. Honestly, it's you know, like everybody's been saying, it's been hard to predict and it's been hard to trade because the setups there, they tell you one thing, but then they do the opposite of what they should be doing. So just whatever happens, guys, be patient and respect your stop loss, respect your entry, the criteria that you have, and don't over position yourself, okay? And remember, do not get biased to any direction just because somebody is saying something out there, okay? That's it. So yeah, I hopefully this helps you guys get ready for the rest of the week, and I'll see you on the next one. You guys have a great week, stay green, and again, be patient.